Hello, everybody, and thank you for joining me today. It's Alan Barry Labacan with the Rocks and Stocks News Show. This is my weekend edition, and I think of these like a mining conference on the internet. And so I got a good show lined up for you today. First thing I want to talk about is, and I think these first few subjects are really important, and I think that you have time to prepare for what's upcoming, but you need to prepare because there's some serious stuff happening that are going to affect many people, especially investors. And one of those is that the job market is stalling. And where the jobs market goes, so goes the economy. And what that says to me is that when the jobs market is stalling, and it won't be long before the economy starts stalling, and that's why the markets often and give you indicators of what's going to happen, and there's a lot of things that are signaling what's going to happen. The jobs market is absolutely in free fall. And so if that's happening, the economy is going to be in trouble. Does that mean it goes into a recession? I don't know. We'll see over the next little while, but it's certainly going to slow down. Now, does it slow down all the way to a recession, or does it get close to a recession, or does it dip into a recession? We still need to determine that. But the big point is that what is happening is that stagflation is going to be a much bigger problem than it is right now. Currently, they talk about maybe 1.5%, 2% of growth and around 3% of inflation. If you use the government statistics, which overestimate, over underestimate inflation and overestimate the actual real job market in real time. And so even that, you use those hiked up or fake numbers, and you're still looking at about 1% of stagflation. Now, if it drops lower, let's say to a half a percent of growth, or even towards zero, and you get inflation going well above 3%, now you got 3% stagflation. And that is, once that genie's out of the bottle, it's not going back into the bottle. And it's about to be released from the bottle in a big way because of interest rates. The the stalling of the jobs market and the economy is going to force the Fed into lowering interest rates. When they lower interest rates, they are effectively throwing inflation under the bus. They're going to let inflation run hotter than their target of 2%. It's going to run hotter than 3%. It could run hotter than 4% in the real economy. And once that gets going, it can't be stopped because the Federal Reserve really doesn't have the tools to do anything about it. So it has to choose: do I throw the economy and jobs under the bus, or do I throw inflation under the bus? And they're going to choose to throw inflation under the bus. So inflation is about to get much hotter. And it was going to get hotter anyways, because when they do the US dollar, let's pull that up, the US dollar is already under pressure. So when a economy is dependent um, on imports, it when the US dollar's going down, the cost of the imports go up. And that's what's been happening ever since, well, to all of 2025 so far. It has been stabilizing somewhat, but they start actually, or even getting close to the next meeting when they do cut rates, watch it go below the 50-day moving average like nobody's business. And so there's that effect on inflation, plus there's the tariffs. Now, the tariffs have been somewhat front ran, and inventories were built up when Trump got in and started talking about the tariffs, but they're going to work their way into the economy. They are not going, there's no way that they're going to be transitory. Inflation is never transitory. It never has been transitory. It never will be transitory. For Besant and Trump and even Powell to use that kind of a term, transitory or short-lived or one time, is out to lunch as far as I'm concerned. And so when they throw interest rate or when they throw the inflation under the bus, inflation's going to pick up in a big way. So this stagflationary problem, it's only going to get worse. And so you've got this combination of the jobs are stalling, the economy's stalling, stagflation is kicking in, the Fed's about to make a bigger problem on the inflation side. Sure, maybe they can avoid a recession, but what's 0.5% of growth? So what? And they're not going to be able to do that with 0.25% moves. So it will become really well understood very quickly that 0.5% here or there isn't going to make a difference. So I see this US dollar going down. And so what's happening while the US dollar is going down? Well, let's take a look at gold. And gold is the perfect hedge. Look at 2025. Started out down here. Even if you look at only a 6-8 month, it's a bottom left to the top right over the 8 months, 9 months of the year so far. Well, 8 finished and 6 days into a new one. But as you can see, in 2025, lower left, top right, while the US dollar has been going from the top left to the bottom right. And so you have a chance to prepare. Gold is a perfect hedge against inflation, stagflation, and investors need to pay attention to that. But so is silver. Silver is doing a very similar pattern as is gold. Look at it. Look at how well it's performing. It's doing a very similar thing, and silver's just starting to break out. I think you're going to see it break out towards $50 per ounce this year, and then set a new series of record highs very quickly. So as you can see, gold is breaking out quite significantly, and so is silver. And as I said, I see silver, if it doesn't happen by the fourth quarter of this year, it'll be in the first quarter of next year where it breaks above $50 an ounce. It starts making a series of new record highs, just like we saw in gold. Gold back in 2024 was down here, and it broke above 2,100 and just has made a series of record highs ever since. And I see the same thing happening for silver. Now, both gold is a great hedge also against the foolishness of the spending in Washington. That is what has caused the death spiral of debt, and it's only getting worse. It's not getting any better. The spending continues. The death spiral of debt continues. The cost of servicing the debt is high. Even if you lowered interest rates down to a couple percent on the amount of debt you've got, it's still close to a couple $1 trillion a year just to service the debt. This is what a death spiral of debt is all about. And that's what we have. And investors have a choice. Do you want to keep believing the nonsense? Do you want to keep on chasing overvalued Wall Street stocks, overvalued tech stocks, bubble in crypto? You can chase all those all you want, but you're not preparing for what's coming. And what's coming is going to be very good for the price of gold and silver. Now, speaking of gold and silver, there's a big mining conference coming up. It's in Beaver Creek, Colorado. It's one of the best conferences in the world. And that's what this show is going to be about today when I'm going to be talking about companies that will be attending the Beaver Creek conference. And so before I get into that, there was four companies that I want to talk about that had news out that kind of on Friday. Most of the time, companies don't put news out on Friday, but four companies did. They were very impressive, and I think what they were trying to do was front run the Beaver Creek conference and get some news out so people could talk about it over the weekend. So that's what I'm going to do. Here is Aris Mining. And on Friday, they announced that Aris Mining announces steady ramp up at Segovia following second mill commissioning in late June. They reported that strong progress with the ramp up at their Segovia operations following successful commissioning of a second mill in June of 2025. The expanded processing capacity has already delivered a substantial increase in mill throughput and gold production. This has me very excited because Segovia is a wonderful mine. It's a low-cost producer. It's got high grade. It's a free cash flow machine, and now they're going to make it even into a bigger free cash flow machine. Here are some of the key highlights. The second mill was successfully commissioned in late June 2025 on time and within budget, increasing installed processing capacity by 50% from 2,000 tons per day to 3,000 tons per day. Milling rates increased sharply in July and August, averaging 2,415 tons per day compared to 1,971 tons per day over the 6 months ended June 30th. In August, throughput also reached approximately 3,000 tons per day on several days, demonstrating strong operating performance at design capacity. Processed gold grades averaged 10 grams per ton in July and August, which reflects disciplined use of additional processing capacity and production growth without compromising grade. Year-to-date production at Segovia to August 31st, 2025 totals 141,000 ounces, including 42,817 ounces produced in July and August. In addition, the Marmato Narrow Vein Zone contributed 4,936 ounces in July and August, bringing consolidated year-to-date gold production to 161,000 ounces. Aris remains on track to achieve its full year 2025 production guidance of 230 to 275,000 ounces. There is more details in this news release, but the big highlights for me are that increasing that production on what is already a free cash flow machine of a mine, and they're going to make it into more of one. Here's their stock. And as you can see, as the word's been getting out about the performance, it's had a huge run of late to break well above its 50-day moving average. And I think they got a lot of blue sky ahead of them as they ramp this thing up to full commercial full milling capacity. It's only going to help their bottom line, which is already looking very strong. They're loaded up with cash and they're going to be generating a lot more free cash. So that's the Aris story. Here we have Dryden Gold. Dryden Gold intercepts, this also was out on Friday. Dryden Gold intercepts 55.3 grams per ton of gold over 3.50 meters, including 379 grams per ton of gold over a half a meter from the gap hole at Gold Rock. They reported assay results from hole 018. This hole is the company's most significant test of the Gold Rock target area. The hole was designed to test all the stacked mineralized gold structures across the 430-meter area between the Big Master and the El Oro systems. They talk about the gap zone intersected a total of 9 stacked gold mineralized structures over a total drill length of 540 meters. So in that 540 meters, they hit basically 9 separate veins across the Gold Rock target area. High-grade intercepts and those are the ones that they had in the headline, near surface intercept of 0.93 grams per ton of gold over 9 meters. And as you can see, here's a lot of their high grade from a cross section where you can see the Big Master Gold system as well as El Oro and they're finding new veins in the system as well. Trey Wasser, who's the CEO, he stated, and I quote, "We are very pleased with these exciting results from the gap hole. This hole confirms 9 gold mineralized structures and begins to show our shareholders a much fuller picture of what Dryden Gold is building in the Gold Rock target area. Having already drilled a kilometer of strike length on the El-Oro system, the gap hole has now revealed a wider and much more robust gold mineralized system with open pit potential," end quote. I'm not necessarily too excited about the open pit potential. Orogenic gold systems have very deep roots, and as you follow those roots deeper, the grades go up as you get closer to the heat engine of the system. And I think ultimately that what this will be, if it's a mine, it will be an underground mine that mines gold at a very low cost and has a very high grade, making for exceptional free cash flow. And it has all the hallmarks of the Red Lake mine, which made the Gold Corp the historic story it was, success story it was. And so I really love high grade gold, and seeing that high grade gold in the kind of intersections that you want to see in an orogenic gold system is very exciting. Now I'm going to pull up their stock chart, and here we go. DRY is their stock symbol. And as you can see, it's been firming up and gone through a golden cross as they've been drilling. It had a good run, it softened up and had another good run of late. They're doing a lot of drilling. They got a lot of money to do a lot of drilling. They'll have a lot of news flow. And so stay tuned for more on Dryden. Okay, Newfound Gold. They also had news out on Friday, and what they said is Newfound Gold and Maritime enter into definitive agreement to combine. Combination creates an emerging Canadian gold producer. Collectively, Newfound is pleased to announce the companies, that's Newfound and Maritime, have entered into a definitive agreement pursuant to which Newfound Gold has agreed to acquire all of the issued and outstanding common shares of Maritime that it does not already own. They talked about doing a conference call and webcast. I'm sure you can find that on their website. Here's a quote from Keith Boyle, who's the CEO and director of Newfound Gold. He stated, and I quote, "From day one, the focus of our new board and management has been to rapidly advance to cash flow and transform New Gold from an exploration company to a gold producer. This acquisition positions Newfound Gold as an emerging producer with gold production expected to commence next year. The synergies obtained by this combination de-risks Queensway, providing access to a milling facility and near-term cash flow to support phase 1 development, setting the stage for Queensway to commence production in 2027. We look forward to the successful completion of this transaction and providing guidance in the due course," end quote. So there you go, folks. This gives them the ability to rapidly move towards production in 2027. This was the missing piece in the puzzle, and now they got it looked after. Garrett McDonald, who is the president, CEO, and director of Maritime, stated, "This transaction provides Maritime shareholders with a near-term premium offer and a longer-term opportunity to be part of a much larger Canadian gold story. Bringing the two companies' assets together will unlock operational synergies, generating cash flow by utilizing both Maritime gold plants to fund future growth at Hammerdown, Queensway, and aggressive exploration across all land holdings. This transaction recognizes the significant efforts of Maritime's team to bring Hammerdown online and provides an excellent outcome for Maritime shareholders," end quote. Then they give you the details of the deal, and I'll leave that for you to go and do your homework and read the news release. But yeah, that was the piece in the puzzle that they needed towards fast tracking the project into production. Let's have a look at the stock. Newfound Gold, there it is. All righty. So as you can see, it bottomed out here in April, and since then has been on a very nice run. This was around the time that they brought in mine developers, and since then the stock has turned around quite significantly. It has. I picked it as an official pick just before it went through a golden cross, and now it is going through a golden cross. And I think you'll see the trajectory of the 50-day moving average increase in trajectory. And that will happen because the stock moves up and pulls the 50-day up with it. And so that is the Newfound Gold story. One of my favorite companies is a sponsor of my reports. It's called Vizsla Silver. I think this company is going to merge into being the next major silver mining company. I love having them as a sponsor because it enables my audience to watch the development through interviews and my coverage of the company. And I also thank them on behalf of my audience because sponsors help me to do the work that I do and not have to charge my audience to see the work that I do. So what did they announce? On Friday, they announced that Vizsla Silver enters into a US $200 million project finance mandate with Macquarie to fund development of the Panuco project. They announced, pleased to announce, mandate letter with Macquarie as lead arranger for a senior secured project financing facility of up to 220 million to fund construction and development of the high-grade underground Panuco silver gold project in Sinaloa, Mexico. The facility will be arranged by a syndicate of banks, with Macquarie retaining a 70% interest and managing syndication of the remaining 30%. Macquarie will act as a lead arranger, agent, and sole underwriter. In this capacity, Macquarie will be responsible for coordinating the syndication process and ongoing project monitoring. They give you more details about this. Mike Conard, who's the president and CEO of Vizsla, stated, and I quote, Macquarie brings deep expertise in structuring project financing for large-scale mining developments, reinforcing Panuco as a globally recognized financeable asset. Securing this debt financing mandate brings us one step closer to de-risking Panuco into production. Their support with the company's current cash position, this debt facility is expected to fully fund the Panuco project through to first silver production, and we remain firmly on schedule with this and other de-risking milestones, positioning us to transition seamlessly into construction. I would also like to recognize Chris Adams, our debt advisor, for his pivotal role in preparing Vizsla for an efficient and successful negotiation process, end quote. So they give you some more details, but that just goes to show you the quality of the project. Well before they even start construction, they've got the package in place. So let's take a look at Vizsla's stock. Vizsla is doing extremely well since they bottomed in late October of 2023. They've been going from the bottom left to the top right. Recently, they've been breaking out quite significantly from the 50-day moving average. The 50-day moving average is on a very bullish trajectory. And there you go. That's the Vizsla story. I think it's a unicorn, a silver unicorn in the making, and it will make them into the next major silver mining company. All right. Okay. So now that I've done that, I wanted to talk to you a little bit about value propositions, because some people, when they see something like Agnico Eagle, that when I picked it, it was trading at about $60 and had been going sideways for quite some time. And then it had an important breakout and it's been going up ever since. So from $60 to Friday's close of $210. And many people think that they missed the boat. Well, if you look at value propositions and you look at free cash flow, they're actually probably cheaper now on a free cash flow basis than they were when they were $60 a share. This is the dynamics of a bull market for a gold miner when that gold miner is very efficient mining by keeping their costs down, by being able to replace what they mine, by being able uh, to build, to increase their production and bring down their costs. So when you look at something like this, well, you say, oh, I could have gone in at $60 when Alan first started talking about it. I missed the boat. Well, not really. Not when you look at the difference in free cash flow from then to now and where I think it is going with the price of gold going higher. They're going to make even more records in free cash flow like they have been for about the last 4 or 5 quarters in a row. As gold is making record highs, it's making record highs, and it continuously, substantially outperforms gold. And that's why you want to own a gold mining company for that added torque. Now, if you're the kind of person that is risk averse, well, this is a perfect way to look at getting added torque to the price of gold without a lot of downside risk. When a company makes as much free cash flow as Agnico Eagle does, that's the bottom line protector of downside risk. So another company that I think is coming into a very nice scenario as a value proposition is Newmont. Newmont until 2025 had kind of been underperformed. No, they had been underperforming their peers. And then I saw that they made some really important strategic changes. They sold off their non-core assets, which brings their production down. But by doing that, they could focus on their tier one mines and make them better. And by doing that, they are now making records in free cash flow. So some people always say, oh, bigger is better. Well, not necessarily. Bigger free cash flow is better. And that's what Newmont is doing. And that's why it is now one of the best performing S&P 500 companies in 2025. I didn't get in at the lowest price at about 36. I started picking it at about 44 and it closed Friday at 76. That's Canadian, that's US dollars, by the way. And so I see a lot of good things ahead for Newmont. All righty. Now, those are my two major gold mining picks. And now I'm going to go to my major silver miner, who is the premier operator of silver mines. And as you can see from 2024, early 2024, they bottomed at about $13. They've been going from the lower left to the top right ever since, currently trading at 34.60. When it dipped down to this 50-day moving average, I bit the bullet and made them a pick because I think that they're coming into a ramped up move due to the price of silver getting much higher. It's made that breakout above $40. And look at what happened after it silver broke out above $35, which I talked about being an inflection point. Now it's through the inflection point, and the stock has went from $27 per share to 34.60. As gold or as silver goes towards $50 an ounce, which I think it's going to do this year, and breaks through that and goes on to new record highs, I think you're going to see phenomenal performance from Pan American Silver. Folks, you don't have to get in at the lowest price to make a good investment. Yeah, sure, if you bought back here, but you'd be taking on more risk. You buy up here, you're taking on less risk, and you're about to go into a juiced up situation for free cash flow as the price of silver goes higher. That's why I like Pan American Silver. So those are my only major mining company picks. One of my favorite mid tiers is Alamos Gold. I picked them back here in March when they were trading at about $11.52. They closed on Friday at $32.19. They've gone from the lower left to the upper right. Why have they done that? Because they're an excellent operator. They are able to uh, build and bring down their cost, replace their gold. Right now, they're using a lot of their free cash flow to uh, for capex, but that is high impact spending because what it's going to do is it's going to enable them to grow their production quite dramatically and also bring down their cost of producing gold as equally as dramatic. They're going to be able to bring their cost down to about $300 or $400 less than the average cost that gold miners are mining gold for right now. This will make their use of that free cash flow to create even more free cash flow down the road. So I'm a big fan of Alamos Gold and have been since early 2024, and not a thing has changed. In fact, again, here's another example. They are less risky and cheaper today with a higher share price when you look at free cash flow and the ability to grow that free cash flow. That's my story, and I'm sticking to it. Equinox. Equinox is it's going through a turnaround that I think is quite exceptional. They are bringing the Greenstone mine in Ontario into full commercial production, and they were having some stumbles that caused this to get down here. And then they brought in a new CEO who's an exceptional operator. In a matter of days or weeks, he was able to make a big significant difference to the bottom line performance at Greenstone. And so now they've got it all dialed in and it's moving into full commercial production. And at the same time they're doing that, they're also bringing they're pouring gold now and they're bringing it into commercial production, the Valentine Lake mine. So they got two great mines coming on stream, full commercial production in the next, let's say, year or so. And when they do that, that will get them over 1 million ounces of annual production. And that makes them unique. There's not a lot of 1 million ounce producers or 1 million+ ounce producers in the gold space, especially low cost producers. And they're going to be a low cost producer. So when you can double your production and bring down your cost, that's exactly what they're going to do. Now, some of the number crunchers, the bean counters at the institutions and analysts, it might take them a few quarters for them to be able to crunch the numbers, but you can see it in their news releases, and that's why it's broken out so significantly. And I would point out this trajectory of this 50-day moving average. It's going up at a very steep angle. And when that happens, I always see stocks go up quite dramatically. So stay tuned for more from Equinox. I really love what they're doing and the way the new CEO is operating things. ORLA Mining. ORLA Mining has recently had a significant breakout. As gold has broken out, it has broken out above the 50-day moving average after following gold, basically going sideways in a basing pattern. And now that gold's breaking out, it's breaking out. They got a great mine at their Camino Rojo in Mexico. Plus, they've got the Musselwhite mine. Earlier, when I was talking about Newmont selling off their tier two assets, what's a tier two asset for a Newmont is a great project for a company the size of Orla. And Orla bought one of those called Musselwhite in Ontario. And so they're getting that rolling along really nicely. And then they got another project in the pipeline that will be their third mine. And this is an acquisitive company. They could be in the acquisition mode as they are performing well and gold performs well, their bottom line performs, and these guys could be in the mergers and acquisition arena. And so those are the reasons that I like Orla. All right. I wanted to talk about some companies that are coming to life in a very impressive way. One of those is called Norsemont Mining. The first iteration of this company was a very successful pick for me. I picked it when it was like under 50 cents a share, and they ultimately got bought out for around a $500 million. And now the same leader, Mark Levy, is running the second iteration. And it was a sleepy company until a couple months ago. And since then, it's had a significant breakout, trading strongly above the 50-day moving average. And you can see the trajectory of the 50-day moving average is extremely bullish. So then you start asking, well, what are the catalysts? Well, the catalysts are some have already happened. They recently announced that they did three tranches of a private placement to raise $6 million. Those included investments from Rob McEwen, one of the mining legends who's made his fortune from building Gold Corp and also being an astute investor. He came into the private placement, as did Dr. Quinton Henney. Dr. Quinton Henney is the one of the key people at a hedge fund called Crescat Capital. Crescat Capital also put money in. Larry Lepard, a famous investor, put money in. And recently, just last week, they brought Paul Matisic in. Paul Matisic is a serial mining entrepreneur who has built and exited multi-billion dollars worth of deals. He put his own money into the deal in the private placement. So that $6 million gives them the money to get drilling on their project. Their project has 2.7 million ounces of gold in it, and that resource is all contained within about the first 80 meters from the surface. Some of it's oxide and some of it's categorized as sulfide. But what is interesting about the sulfide portion is that the gold is not encased inside of sulfides, it's attached to sulfides. So why that's important is because it's almost like free gold in a quartz vein where you crush the vein and that liberates the gold. You use gravity separation and some other processes, but what it means is it's easy to recover. Okay, when you're encased the gold is encased in a sulfide, then you got to use high temperature and high pressure in order to make that gold recoverable. And this requires a roaster or an autoclave, and those are very expensive. They cost like $1 billion plus, and you don't want to have to do that. Well, when you have the sulfide gold, the gold is attached to the sulfide. That is a huge advantage. And so they've already done a technical report that talks about this situation. And you can find that on their technical report on their website. But some of that money, and it's very low cost to do metallurgical work. They're going to do metallurgical work, more optimized metallurgical work. And so that will enable them to show with a tech 40 with metallurgical testing that what I'm talking about now on a bigger scale optimized. I'm very excited about the drilling campaign because the emplacement of the gold in this system was through vertical emplacement, and all the drill holes are vertical. That's not optimized drilling. It was done a long time ago. Going in at an angle can make a huge difference to increase your resource, increase your grade, and then they've got like an 8 kilometer alteration zone, so it's wide open for exploration. That's why they've recently come to life, and I think this is just getting started. So take a look at Norsemont. Another company that is coming to life, well, it's hard to say it's coming to life because it's only been trading since December, but it did get, after it went public, it got beaten down all the way to about 35 cents. And since then, it's been going up. Why has that happened? I'm a shareholder of this company, by the way. Why is that happening? It's happening because they have found on their 1,300 square kilometer project, they found that this project was a past producer until 2022 by Glencore, one of the world's largest base metal miners. And they were only interested in the base metals. They weren't interested in the gold potential, even though it's a 1,300 square kilometer property in the Abitibi, which is one of the greatest gold mining jurisdictions in the world. This project had never been looked at for gold. These guys drilled into it and hit a gold discovery that had a half an ounce per ton in it, over a thin intersection. That's what these orogenic gold systems are. They're steeply dipping, they're narrow, steeply dipping veins, basically. And they pinch and swell, they have dilation zones. But to get out of the gate and hit a half an ounce per ton in your first discovery hole, great stuff. They got more holes going in, they had more results. They also did base metal drilling and found great results in the base metals as well. So this company has two catalysts for growth. One is bringing the base metal deposits that are not at the end of their life, they're still open, bring those back into production. And the first one they're going to bring back into production is called Brace McMcLeod. There's a series of underground workings that need to be extended, but sitting 25 meters from those underground workings is where they drilled this gold discovery. So they can drill from underground and chase after that gold discovery. And if it looks like it's a mine, you would just extend your ramps out in another direction, your underground workings in another direction. Some of it's already built for you. So they got a great project and a very modest valuation. And yeah, they've improved a lot, but again, I point out the trajectory of this 50-day moving average. When I see them going up like that, it tells me that if I just extend that, that's the direction the stock's going to be going. So I'm a big fan of Nuvau, and I think you should do your homework on Nuvau. Inventus is another company that I'm a big fan of. Inventus Mining. They came to life in really, they had a pretty nice run. Then they went sideways for a few months, but over the last few months, they broke out from 10 cents a share, closed on Friday at 28 cents a share. This company has a very tiny valuation, but they got a great project. It's one of these conglomerate gold stories. One of the great mines of the world is a conglomerate gold. The greatest gold mine, actually, is the Witwatersrand mine in South Africa. And it's a conglomerate gold story. So you can think of it like the bottom of a lake, if you will. They're even called reefs. And these things can be very, very big. And recently, the company had some drill results that show that they've got room to grow the deposit. They've been doing bulk sampling. They are toll milling that at McEwen Mining's mill not far away. Everything's going really well there. So well that McEwen Mining prepaid them for the gold that's going to come out of their bulk sample. And so Inventus has a really good story, but it's kind of an undiscovered gem. And I really think it is a gem. So do your homework on Inventus Mining. IVS is their stock symbol. Turnaround. Oh, AMC. I picked this company after they had gotten hammered down, and I still all the way down, all the way at the bottom. And as it's coming back up, I've been talking about this company because I think the reason it got punished was the market didn't clearly understand the strategy of what they were doing. They were doing a resource estimate, but quickly wanted to do a preliminary economic assessment. So when you do that kind of a resource estimate, you have to be pretty conservative because you got to put economic numbers around it. That's what they were doing, but the market just punished them because of this conservative mineral resource estimate. Now that they're getting close to putting out a preliminary economic assessment, I think you want to do your homework right now. Because if that comes out the way I think it will, and I think it will be received much better than the resource estimate, and then they'll have more drill results and other catalysts as well. I really like what I see with Arizona Metals. AMC is their stock symbol. Another turnaround play for me is Foran Mining. I picked them not long after they bottomed out here at about, let's say, $2.50. They're now trading at $3.12. They have recently announced, which helps them break through the 50-day moving average, that they're 50% of the way to building their mine that they're bringing into production. This puts them into what is called the sweet spot of the Lassonde curve. There's two exciting run-ups in the Lassonde curve. One is when you make a discovery, one is when you bring it into production. In between is the valley of sin or the orphan phase or the development discount window. But as you get towards the end of the development discount window is where you start going up the right side of the Lassonde curve. And that's because the company stops spending money and starts making money. And they've got a project with a 35-year mine life. And speaking of Lassonde curve, Pierre Lassonde himself is an investor in this company, as is Agnico Eagle Mining. And Agnico Eagle Mining, really what helped them build themselves up to the household name that they are now, is a mine that looks very much like the mine that Foran is building. So people like Pierre Lassonde and Agnico Eagle Mining have done your homework for you. Do a Google search on the Lassonde curve and look at the end of the development discount window and what happens after it. I think that's what's going to happen with Foran, and I think you should do your homework on Foran. Breakouts just this week. I've been doing these in the news shows, and YouTube is bringing a lot of viewers to those shows, and they're getting a lot of attention. And not the day after, I did one the night of before this spike. Next morning, it took off. And this is a breakout on the in the news section of the Rocks and Stocks News. The company has a really great story. In fact, why don't you go to you'll look through my YouTube, and a few days ago I did an in the news and I talked about the company, and you'll find it in the description. And I don't want to go into all the details of what I talked about there, but I'm very happy to see them getting the recognition that they deserve. They're looking for a big porphyry system in Nevada. I think they might have it. The market obviously thinks they might have it. We need to see the assay results. They should be coming out in the not too distant future. So stay tuned for news from Almadex. Another significant breakout from my show this week, the In the News shows, was Golden Cross Resources. They had a nice run over the last few days. I talked about them right before this when it basically moved from 77 cents to close Friday at 90 cents. So that was a 12.5% move. Very beautiful. This company has a great land package in Australia. They're looking for an orogenic gold system about 30 kilometers from one of the great orogenic gold mines in the world, which is called Fosterville. They're in the same kind of rocks. They got the same kind of geological characteristics. They're drilling right now. They're loaded up with cash. They're going to have a lot of assay results out. They're right beside a company that is another pick who has made a big discovery just to the immediate south of them called Southern Cross Gold. And stay tuned for news from Golden Cross, because once they start announcing assay results from their drilling, they'll have months worth of news releases. And another company that had a beautiful breakout after I talked about them on my show when they had some news out was McEwen Mining. They had asset results out and the stock just blasted off from about $15 a share to almost $20 a share. It closed Friday at $18.76 a share. This company offers, and I've been saying it for a long time, a tremendous value proposition. When you look at the quality of their mining, gold mining assets, and what they're doing to increase their production and bring down their costs, plus they have one of the top 10 undeveloped copper mines in the world. This makes for a very compelling story for today as well as into the future. And I'm really happy to see that that value proposition that I've been talking about is finally getting recognized and doing very well. And I think it's got a lot more blue sky ahead of it because in reality, the company is still being priced. There are junior exploration companies that are not mining and won't be mining gold for many years into the future that have higher valuations than this company. And this company is mining. They're increasing their production over the next couple of years. They'll get that few years, they'll get it to about 250,000 ounces of gold while also bringing down their production. And they'll be moving their copper project forward, and it's going to have a preliminary economic assessment out very soon. Or no, sorry, a feasibility study. It could come out at any day now. They said that they were going to have it out in the third quarter. Well, we're only about 3 weeks from the end of the third quarter, so take that for what you will. All right. So now there's a series of companies that I'm going to talk about quickly that are going to be at the Beaver Creek, attending the Beaver Creek conference. One of them is Amex Exploration. Let's pull up their chart. They just had important news out that I talked about on a recent show on Thursday, and that was a preliminary economic assessment. They've really broken out quite nicely. I've got to thank this company extra because they're a sponsor of my shows. I appreciate sponsors because they enable me to do the shows that I do and provide these to my audience for no charge. And for that, I do regular coverage of the company, including interviews with their management. And I go over their news, but I do that for a lot of companies, whether they're a sponsor or not. But I am very well informed about my sponsors. I follow them like a dog on a bone, if you will. And they've had, as they've been, since this last few months, they've been announcing and talking about their plans to bring this into near-term production, specifically their Champagne zone. And their Champagne zone has about 850,000 ounces of gold with an average grade of 16.2 grams per ton of gold that starts right at surface and continues beyond 1,000 meters of depth. Now, you can't get that all into the measured and indicated like that 850,000. They got about another 150,000 that's in inferred that needs to be converted. When they converted to that 850,000 into measured and indicated, the grade went up. The grade is already in the inferred at about 10 grams per ton of gold. So this is a high grade system at the Champagne zone. And the plan is to use that to be able to build out and mine their other deposits on the project and also make free cash flow off of the Champagne zone. And so as they've been getting the word out about their game plan for near-term production, the valuation has improved quite nicely. And this is a company you want to do your homework on, and they'll be at the Beaver Creek conference. AGAG is Argenta. Argenta will also be at the conference. I like this company a lot because they're a high-grade silver exploration company with a 50 million ounce resource that they've been doing drilling to expand that resource. The rule of thumb is you want to get to about 100 million ounces of silver. That would give you about a 10-year mine life with 10 million ounces of silver production per year. If you do it at a very low cost, you make a lot of money, especially if silver goes to where I think it's going to go. The company has had a very nice cup and handle, as you can see, and they got more drilling happening, more drill results happening, lots of news flow. So do your homework on Argenta Gold, Silver, which is AGAG. All right, as you'll notice, these are all being done by alphabetically. Another silver company is Blackrock Silver. Now, this company has exceeded that 1 million ounce resource. And so they're now expanding on that even more. And it looks like they won't have any problem expanding on that. So they've already passed that milestone of getting over 100 million ounces of silver. And it's a low cost, high grade. It will have a tremendous free cash flow. There's not a lot of great silver stories out there to look at. I think Blackrock Silver should definitely be on your list. They've had a nice breakout. They went through their Golden Cross. The trajectory of their 50-day moving average is very steep. And yeah, I think it's got a lot more blue sky ahead of it. So that's the Blackrock story. Borealis Mining is also going to be at the conference. They're a junior gold miner. They're starting out by processing the material that's in the stockpile from the historical production. And they're ramping that up and starting to get ready to pour gold. And then they're going to be looking at bringing some of their known pits back into production and adding to the stockpile. And then they're doing also exploration work to find new deposits. So they've got a whole stream of catalysts. They've been catching attention lately. They had their Golden Cross here. They're firming up quite nicely. I really think this is an undiscovered gem of a company. I'm a shareholder of the company. They're a sponsor of my reports. I thank them for that sponsorship. It helps me to follow their company closely and also enables me to be able to do my shows and provide those shows at no charge to my audience. So I'm thankful of that. And I really think this is a company you want to do your homework on because there isn't very many new gold juniors, miners in Nevada. And they have a great group of projects, a great management team, a great board of directors, a great shareholder registry. Rob McEwen, legendary mining investor, is their largest individual shareholder. And yeah, I think this company has a very bright future to grow into a much larger company. Okay, Equinox will be at the conference, but I've already talked about Equinox, so I don't need to do that again. Generation Mining, they'll be at the conference. Generation Mining has a great copper and palladium um, mine that's in development. They've gone through all their permitting, they've done their feasibility studies. Now it's a matter of getting the funding to bring it into production. And for investors that want exposure to copper, platinum, and palladium, that's what this deposit they have is. There are not very many projects like that for investors to get exposure to palladium and platinum through, but Generation Mining is one of those companies. I'm a big fan of their management. They're very successful people, and I think they've got a great mine on their hands, and that's another one you want to take a look at. Goliath, I talk a lot about Goliath because they are my highest conviction uh, gold exploration company with an important discovery. They are in the midst of a 60,000 meter drill program. They have only released, I think the total will be 60 or 70 holes will be drilled, and they've only released the assay results from a handful of them so far. They've got months worth of news on assay results to come out. This is a great project that is loaded up with visible gold to the naked eye throughout this deposit. It's got a very big footprint of visible gold to the naked eye, or VGNE, in their Golden Mountain, that I call it, which is where they made the Sherbet discovery. And yeah, they have a lot of catalysts coming up, and I think you should do your homework on Goliath. I'm a big fan of the project, and I think it's got a lot of blue sky ahead of it. And I'm a shareholder. Heliostar. Heliostar has been doing very well since they bottomed over here, going from the lower left to the top right. They bought some small scale mines, and the idea was to use the free cash flow from those to fund the exploration and development of their cornerstone project, which is called Anapala. But in addition to that, they've also got exploration potential on these mines that they acquired. And so all of that combined, I think, makes for a very compelling story. Recently, as gold broke out, and they've been performing much like gold. As gold was going sideways, they were going sideways right around that 50-day moving average. As gold has recently broken out, so have they. And I'm a real fan of the management of this company and the quality of their assets and their ability to grow into a much bigger company. So do your homework on Heliostar. The stock symbol is HSTR. Kootenay Silver will also be at the conference, the Beaver Creek conference. They are one of my favorite silver explorers. And they're doing a bunch of drilling. They got a bunch of results to come out. They've gone through a Golden Cross here. The trajectory is very bullish. They have a lot of news to come out. And I'm a real fan of this project because it's high grade. It's in Mexico where the costs are low, and that makes for great silver mines. When you got a low cost of production and a high grade, it makes for a free cash flow machine. And I think that that's what they're finding, and that's what will happen in the future for this company. Or who knows, maybe somebody else will develop the mine. But I think they got a great discovery. Okay, the next company that will also be at Beaver Creek, but I've already talked about them, is McEwen Mining. So look earlier in the show for my talk about McEwen Mining, but look them up if you're at Beaver Creek. MNO, they'll also be at Beaver Creek, and that's Meridian Mining. Meridian Mining has had a significant breakout in the last, well, since earlier this year when they were trading at about 40 cents. They had a Golden Cross, and it's been onwards and upwards since then. They put out a lot of great news on drilling. They got a really exceptional project for copper and gold in Brazil that will be an open pit. And for open pits, it's got a very high grade. These are low, most open pits are low grade, big tonnage. This one is a little different. It's got for an open pit, it's got very high grades. So it has a beautiful combination of the potential to be a high tonnage and high grade open pit. You don't find those very often. Meridian Mining has one of them. Do your homework on Meridian. Newfound Gold, I already talked about them. They'll be at the conference, so check earlier. Uh, NCX is a company that I recently started covering, and I don't really need to talk about them too much other than to say I recently did an interview a few days ago with their CEO, and I really enjoyed doing it. They've got a great story to tell, and their CEO does a great job of telling their story. So I would advise you to go check out that interview. But I'm a big fan of their project. I'm a big fan of their management. They've got a great shareholder registry. I think that this company has a bright future ahead of it for development of a copper and gold mine. and in British Columbia, in a place where they've got the ability to build a mine. And I think that's exactly what they're going to do. Orla, already talked about them. They'll be at the conference. Don't need to talk about them again. Power Metallic Mines, PNPN. They've been kind of going sideways for the last, let's say, since April. But they're doing a lot of drilling right now, and they've got a very high grade multi-metal discovery in Quebec with super high grades. Copper grades in the double digit percentages kind of stuff. But with also, it's got platinum, palladium, nickel, gold, silver. It's got a good mix of all these great metals, and they're finding it with very high grades. And that's a fantastic combination. So do your homework on Power Metallic, PNPN. Another company that will be there is Sierra Madre. And this is a junior gold and silver miner that's increasing their production. They had some important news out that I talked about a few days ago. Stock broke out quite beautifully. I love their story going forward. I think they're an undiscovered gem of a junior gold and silver miner in Mexico. They got a great, really sharp management team, and yeah, a really good story. And you want to do your homework on Sierra Madre, gold and silver. SXGC is a new pick, Southern Cross. Um, and I picked it right as it was bottoming out of this cup and right as it was starting to go up the left side before it broke through the 50-day moving average, or right when it was a couple days before it. And now it's trading above the 50-day moving average. I think it's going to break out to new record highs. Why I like this company so much is they've got what they're looking for, a Fosterville look-alike, and I think they've already drilled into it. And that's why they've got a $1.4 billion valuation. And they got a whole bunch of drilling going on, and they got lots of assay results to come out. This is a very high-grade gold system. These orogenic systems are known to be steeply dipping and narrow high-grade veins, and that's what they found. And so to advance it, now you got to do more drilling and put those assay results, which is what they're going to be doing. And as you can see, it's created a short-term cup now going up the right side of that. And with gold getting stronger, I think it will get stronger as well and get above the left side of that cup and handle and head into new record highs for the company. Vizsla Silver, I talked about them already. They'll also be at the Beaver Creek conference. So if you get a chance, look them up. Before I close, I want to tell you about a project that I'm working on. I'm planning on doing webinars soon. Stay tuned for those. They're going to be like a mining conference online where they're going to be different than your in-person mining conferences is. Those are basically where executives get up and they do a presentation of their corporate deck, which you can find on their websites. I'm not a big fan of that format. Instead, what we'll do is fireside chats where I'll talk to them, and I'll also get some questions from the live audience and also submissions of questions from my audience that they want me to ask the companies. And so that's going to be an exciting thing. Stay tuned. I'm going to have that start out in the not too distant future. All righty. So that's the show, folks. Do your homework, speak with your financial advisors, and have a great day. And we'll talk to you soon.